Very good evening, ladies and gentlemen. Thank you for joining the Paragon Fine and Specialty Chemical Limited H1 FY24 earnings conference call. Joining us on the call today from the management team is Mr. Rutesh Savalia, Director, Paragon Fine and Specialty Chemical. We will commence the call with the opening thoughts from Ruteshji, post which we will open the forum for Q&A session, where Ruteshji will be glad to respond to any queries that you may have. For the benefit of participants, Paragon Fine and Specialty Chemicals engaged in carbon synthesis and manufacturing of specialty chemical intermediates. It was listed on the NSE Emerge platform on 3rd November 2023. As on today, at the NSE website, the market cap of the company is rupees 352 crores with a PE of around 27 and today's closing price was rupees 180. Before we go on to the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and the subsidiaries which are based on the beliefs and opinions and expectations of the company's management as on the date of this call. The company does not assume any obligation to update their forward-looking statements if those benefits, opinions, expectations or other circumstances should change. These statements are not guaranteed of future performance and involve risks and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I will hand over the call to Mr. Rutesh Savalia to take it forward. Over to you, Ruteshji.
Namaskar. Good evening, ladies and gentlemen. I am Rutesh Savalia, and it is with great pleasure that I welcome you to the first half of financial year 24 earnings call. I trust that you have had the opportunity to dwell into the details of our earnings presentation and the financial results shared on the stock exchange. As this marks our inaugural earnings call, I would like to take a moment to provide you with insights into Paragon Fine and Specialty Chemical Limited, our journey and the diverse spectrum of products we offer. Paragon Fine and Specialty Chemical Limited is dedicated to the manufacturing of specialty intermediates, that is raw materials essential for final products in various sectors including specialty dyes, pharmaceuticals, agriculture, pigments, cosmetics and other niche segments such as electronics and medical devices. Our journey began in 2004 with a commitment to serving the specialty segment, commencing with the production of hair dye intermediates. We are a team of 5, wherein our manufacturing director, Dr. Praveen Chandra, is a lawyer with PhD in law and looks after finance and licensing in the company. Vallabh Savalia, who is a chemical engineer with experience of more than 35 years in chemical industry, looks after the production. Kishore Patolia, a microbiologist, and looks after the marketing since last 2 decades. Myself, Rutesh Savalia, with a PhD in organic chemistry and experience of 4 years, is looking after new product development and marketing. Shivam Patolia, with finance background, has recently joined us. Over the past 2 decades, we have witnessed continuous growth and innovation. Our product range has expanded from cosmetic intermediates to pharmaceutical intermediates, catering to various niche applications in the chemical industry. With more than 140 products and few other products under NDA, we thrive in specialty segment. Moreover, we take pride in our ability to manufacture custom-made products based on rigorous research and development. This has been a backbone of our company to generate more and more business year on year. Our success is rooted in the trust we have built with clients who are associated with us since 2006. Including several multinational corporations. With over 19 chemistry capabilities with complex reactions and intense conditions with high pressure and high temperature, we serve different segments and our presence extends across multiple locations. We are headquartered in Ahmedabad, Gujarat, where we operate 2 manufacturing units in Viramgam. Paragon Fine and Specialty Chemical Limited has established a robust global presence, emerging as a leading provider of specialty chemicals. With a widespread network and an extensive clientele, spanning various industries worldwide, we have earned a reputation for delivering high-quality chemical solutions tailored to meet unique needs of our global partners. Our unwavering commitment to excellence, quality, and customer satisfaction has positioned us as a trusted source for specialized chemical solutions. Adopting a customer-centric approach, we ensure that our customized products meet the requirements and standards of our clients. Presently, we proudly hold prestigious certifications including ISO 9001, ISO 14001, ISO 45001, and SA 8000, attesting to our dedication to upholding international standards in all facets of our operations. With strong R&D team and a DSIR-approved research facility, we are bound to deliver by our tagline of energizing chemistry. Before I open the floor for questions, let me provide you with a brief overview of the major highlights from the first half of the year. I'm pleased to announce that Paragon Fine & Speciality Chemical Limited has demonstrated a robust performance on both financial and operational fronts for the first half of the financial year 24. In terms of financial performance, total revenue of the first half increased by an impressive 85.2%, reaching INR 60.15 crores, showcasing a year-on-year increase of 27.67 crores. EBITDA for the same period stood at 8.89 crores, a significant growth of 115.25%, reflecting an increase of 4.14 crores. PAT for the first half year reached 5.98 crores, a remarkable increase of 104.51%, up by 3.06 crores on a year-on-year basis. This growth can be attributed to various factors, including the overall revenue increase, the normalization of various raw material prices that surged during the challenging times of the pandemic, and the growth in sales of agro intermediates and electronic intermediates, which carry a better margin. Moving to the project updates and product highlights, I'm pleased to announce that our Halquinol manufacturing is now fully commercialized, and we are targeting bulk sales commencement by the end of the current financial year with capacity of 60 metric ton per month. We are closely monitoring industry momentum and are excited about the untapped potential with promising developments from our recent visit to CPHI Noida in November 23. With our Japanese customers, we are on the verge of closing deals within this financial year. With strategic steps in the right direction, focusing on market penetration and expanding our pan-India footprint, we anticipate continued growth in the second half of the fiscal. The upswing in the electronic sector has significantly contributed to our business growth, and we are optimistic about sustained growth, expecting a revenue increase of about 20 to 25% in financial year 24 compared to 23. But because of improvement in operational efficiency and normalization of raw material prices, we expect to see significant margin expansion at bottom line level and expect the same to continue for next few years with sustainable year-on-year increase in turnover. That concludes my presentation. Thank you for your time. I now invite you to open the floor for questions and answers. Thank you. Jai Hind.
Thank you very much. We will now begin the question and answer session. Our first question is from the line of Akshat Vijay, who is an investor. Please go ahead.
Yeah, hello. Am I audible?
Yes, sir. Please go ahead.
Yes. Yeah, thanks for the opportunity. So my first question is regarding the status of the capital expenditure, right? So in your RHP, you mentioned that some 7 or 8 crore rupees will be invested towards installation of additional plant and machinery. So like how much of the additional capacity we can expect from this capex, and by when it can get operationalized?
So the machinery which was planned for the CapEx has already been, we have already placed the orders, and actually the capacity of the plant, the machinery is more related to the upgradation of the plant, where the current facility is a non-GMP plant, good manufacturing practice plant. We are going for the GMP certification, by which our recently launched product, Helquinol, we can also introduce the same product as an antimicrobial in poultry segment.
Okay, so like it will not lead to any capacity expansion, right? So your current capacity is some 680 metric tons per year. That will remain same.
No, it will increase, but there won't be any significant increase. It may increase by, I think, 60 metric tons.
Okay, 60 metric tons per year, right?
Yes, and the total capacity.
Okay. And the next question is regarding your inventory days. So as I can see in your financials, in FY21, your inventory days stood at some 10.25 days, and in FY23, it's like we have seen a sharp increase, and FY23 it stood at some 88 days, right? So what is the justification behind such a sharp rise in the inventory days? So like, are inventories piling up in our godowns, or we have strategically increased it to kind of cater to more demand which you're seeing in future?
The dyes and pigment segment, they had seen there was a low line during last 6 months in these sectors, and we tend to manufacture specialty segments, specialty chemicals out of the commodity products which are available in these segments. So we had procured raw material when the prices were below their raw manufacturing cost.
Okay, so that is why you have increased your raw material inventories, right?
Yeah, and another part is that we also had gone as a backward integration, that we have earlier we were doing only one step, and now we are doing 3 steps. So backward integration for our own products to decrease the dependency on outside companies. So that is also one of the reasons.
Okay, so like current level is, you think, is a sustainable for inventory days?
Yes.
Okay, and the next question is that I saw your website mentioned that Paragon is the largest supplier of 2 products in India. They are chloranil and diclone, right? So
Yes.
can you tell me that what is the contribution of these 2 products in the total revenue, and what is the total addressable market of these 2 products worldwide, and how much market share we hold in that?
So worldwide, we do not have an exact number, but as per my knowledge, worldwide we are contributing to almost to 20%, more than 20% for diclone. So it is also a major export in China. And for chloranil, it again depends upon, because it has 2 varied applications. That is, one is in pigment and another is in pharmaceutical. So that is why we do not have the exact number that how much is the market cap. But yes, being one of the largest player in India for chloranil, we also export this material to US as well.
Okay, and what is the contribution in our total revenue from these 2 products?
For each product, it would be around 5 to 6%.
Okay, only 5 to 6%. Okay.
Yes.
Okay, and just last question from my side. So as I can see that your EBITDA margins have been rising continuously, right? In FY21, they stood at some 8%, and I mean, from there onwards, they've risen to almost 15% in the first half of FY24. So, and you always market yourself as a specialty chemical companies which tend to have much higher margins. So, like, is there any figure which the management is targeting internally for the EBITDA margins going ahead?
We have not like kept a certain margin that we are going to reach there. But how the projects move in specialty chemical is it's a long-term project. The projects which we had finalized in 21, they are being commercialized right now. So there is an steep increase. Like diclone earlier, it was only used for for the direct use as an insecticide. But recently it has also been being used as an intermediate, as a starting material for the further advanced intermediate. So now the application has been increased. So the demand for diclone has also increased. So similarly, all the projects where we are anticipating, the projects which we had started in the end of 21 or 22, those projects are being commercialized right now.
Okay, so this 15% level is kind of sustainable and it can only go up from here, right?
Yes, we are planning to, like, according to us, it will go beyond this.
Okay, and just one last thing that you gave guidance of some 20 to 25% revenue growth in FY24, right? So as I can see in H1 only the growth was much higher. It was some 85% YOY. So I mean, from if I do the maths, then H2 you expect that H2 will be on a muted side in terms of growth.
Yes, because the export market, they have a year ending in December. So this is the time when they tend to decrease down their inventories. So for quarter one, that is from January to March, we see a lower ordering from their side. So that is why the overall it gets. But since our presence is 60% in domestic, there we are seeing a very good growth.
Okay, but like if we check for FY23, then H2 accounted for twice as much revenue as compared to H1. So you don't expect this kind of pattern to continue in the future. H2 will be seasonally weak for you going ahead, right?
Yes, but it again varies upon the segment wise. Like for dye segment, it is one scenario, because in agro segment now is it is the peak season for agro intermediates. While on the electronic segment where we are focusing right now, so that segment that is not dependent on the season, it is not seasonal. It is continuously growing. So it varies from segment to segment, which segment we are looking at. So the projects that were being developed during the COVID time, that had resulted in the start of 23.
Okay. Okay, thank you. Great. All the best. That's it from my side.
Thank you. Our next question is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Thank you for the opportunity, and congratulations on successful listing and a robust first half. I have a few questions. First, I wanted to understand what is the conversations like with our clients overseas, particularly for our end user industries, that is dye intermediates, pharmaceuticals, and other applications such as agro, cosmetics. So if you could give us a sense of the traction you're expecting in each of these core segments over the next, say, 4 to 6 months, if you have that kind of visibility.
Okay. So when we say about the cosmetics, so recently we had a internal audit as a third party audit from L'Oreal. So that we are expecting that in this month we'll get the results from them. So the business will commence. But once the business commences, it doesn't pick up directly. The MNCs tend to increase the business slowly. But since we have got entry into L'Oreal, after that the business will be very good with them. Apart from the cosmetic business that is already being done with the other European brands. So that is one segment. While we come to agro segment, so agro segment we have very good exports to China, and as well as we have NDA with Japanese companies where we manufacture their molecule, and we are also a registered vendor for their registrations. For their agrochemicals, we are a registered vendor in their government. So
Mm-hmm.
these are the segments where we see that this is going to be steadily, it is going to increase. And if we come to dyes and pigment segment, so dyes and pigment segment, we are into only specialty dyes, the raw materials for specialty dyes, which goes into various high margin brands. So our customers, they tend to supply to these big brands. So that is how there we see that it is not going to affect too much. The market scenario, that is not going to affect too much in that segment. And pharma segment, we have recently introduced this Helquinol. So Helquinol, we had already supplied our samples to the poultry feed formulators 2 months back. So we expect that in last quarter of our financial year, we expect that we'll be going for the bulk sales with these formulators, because they study the stability study and everything. After that, they place the orders. So in pharma sector, yes, we are growing, but other sectors, we have already established our products. And in electronic segments also, we are growing with help of our Japanese counterparts. There we are getting a very good support from them, because currently the notion is developing China plus one. So that is helping us, our company, very much in this segment.
So what are we penciling from the electronics chemical side, since that is a sunrise space and we are early into it? So over the next couple of years, what are we penciling compared to our client relationships that they have in the industry? What is it going to scale to?
So currently the molecules are only it is not that it goes into the mobile devices. It goes our one of the chemical, it goes as a pigment, electronic pigment, in electronic pigments that we are supplying to USA. So but that is a limited quantity that we are going to supply, because however big the margins are, the product will remain with a limited quantity. The market for the special products will be a limited market. So that is why we are not committing right now that we are going to be a very good, very big player in electronic segment. But definitely the number of products will increase. After that, we might say that, okay, now we are into advanced electronics segment.
Okay. Since your presentation says that you have a product portfolio of 140 products, how many of them are you expecting to commercialize in the next 12 to 18 months? How many are already on the market, and how many either based on the NDAs like you mentioned with your Japanese clients, or some improved relations on the China export side, or conversations like you said on the cosmetic side are progressing well, and something in US. All of this put together, how many more commercialized products are we going to see which will make a significant contribution to your top line over the next 2 to 3 years? It could change the mix. That's what I want to understand.
Yeah. So first of all, our strategy in the manufacturing is we manufacture to the order basis. So these 140 products, all are commercialized products, but we do not tend to keep stock of these products. We manufacture it once we get the order, because these are specialized products, and we do not know that how much quantity is required year on year by our clients. So that is when they speculate that this is their demand. So they do give up heads up that their demand is going to come up in next quarter. So that is how all our products are there. All 140 products are commercialized. And we are adding, this year we'll be adding, we have estimated that we'll be adding 20 new molecules from our R&D. But the commercialization of these products we might see in 24 end or 25 starting.
Because this is what I was asking you. Which are these molecules that we have done R&D on, tested the market, and shown to our clients, and we see some promise in them? Which are these molecules, and what's the end industries? Which are the markets going to be for these?
For that, let me give you an example. Like in electronic segment, we have a product that is 27ADA. So that product, it goes, as I said, that it goes into electronic pigments, but the same product, it goes into oil and gas industry. So the product which we are developing, earlier, the first stage that we are taking the product into R&D is not solely based on our market survey, but also on the demand from our customer, from our existing customer or from the new customer, because we are already exhibiting since last 20 years all around the globe. So we have a image that we can develop new molecules for them. So when we get new demands, we also study that whether how much big market there is for this product. So after that, after learning that, we take the product in R&D. So initially, whatever product we develop, those products we already have a definitive order for that for those products. But yes, further marketing of those products needs to be done from our side.
Okay. So just the last thing before I get back in the queue. What are the kind of certifications that we are already working on and expecting in the next 1 or 2 quarters, which will help us expand our business with MNC clients, exports, and help us market our products to other industries as well? You mentioned GMP, but are there other things which we are looking at, because we will be expanding our markets and sales strategy also, so these will help.
Yes. So currently, as I said, that we already had a audit from third party, which is Intertech. So from after that audit, those results are not only for L'Oreal, but those results are also applicable to other MNCs, because Intertech is a third party auditor. So the same results we can present to others, and the next certification that we are looking for is EcoVadis. So after EcoVadis, in the normal segments, apart from pharma, when EcoVadis comes, almost all the certifications are, when it is done, after that you get EcoVadis, because it is an extensive certification.
Okay.
And for pharma, yes, there is we are just the starting player for pharma segment, if we say, because there is a lot more. After GMP, it goes to WHO GMP, then getting FDA from various countries like US FDA or EU GMP, and then Japanese FDA. So according to the country, we have to go, and that depends upon the product which we are targeting. So for that, we have what we decided for now is that we are going to get the state GMP, where we can sell our Healthquinol also in the pharma segment. So this is our starting molecule, but definitely we are going to have more molecules in pharma intermediates, and this will be a long game for when we are going into pharma GMP and FDA.
So the Japanese clients which you mentioned, where you have NDAs and other commitments, they don't require any further certification from you. You are already satisfied.
We are not into pharmaceutical with them, not pharma products under NDA with them. We have electronics and agrochemical with them.
Okay. All right. Thank you so much, and wishing you all the best.
Thank you.
Thank you. Next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, thank you very much, sir, for this opportunity. I have, a few queries. Now, first up, I think about 30% of our revenue is exports, right?
40%. 38 to 40%.
38 to 40%. And which are the predominant geographies we cater to?
We have a very wide range of geographies depending upon the segment. Like for agro segment, we are exporting to China. For dyes and pigment, we are exporting to Thailand, Taiwan, and Indonesia. For pigment segment, we are exporting to US and Sun Chemicals USA. We are exporting cosmetics to European segment. And pharma, we are also exporting to US as well as Indian segment. And in Indian segment, we are present in almost all segments.
Okay, understood. And you mentioned that we are going for this GMP certification of our plant, right?
Yes.
So this is both existing and new plant?
Yes, we already we had 2 units in the same location. So one unit we were already following GMP guidelines, but we do not have certification because upgradation in terms of clean room and all other norms are to be followed. So the upgradation of that plant is going to take place.
Okay. And how will this help in our exports?
Voice was breaking.
So how will this help in our exports?
This will not help in our exports, but it will help us in increasing our profit margins. Definitely, it will open up doors for exports for our pharma segment. But for the existing products, it will be more of a that we will get an entry for upcoming pharma projects, where we are seeing that we are developing. Currently, we have few molecules under R&D for pharma. So there, this GMP is compulsory for those intermediates.
Okay. So basically, you mentioned it will help in increasing our profit margin. Will largely be driven by our entry into new pharma project as well as efficiency, right?
Yes.
Improved efficiency because of upgradation.
Yes.
Okay, understood. And I mean, among all the product portfolio, do we classify our products in terms of commodity versus value added? Do we have any kind of share that how much our revenue mix would be commodity and how much our revenue mix would be considered as a value add? I mean, do we do any such kind of exercise for ourselves?
For commodity products, as we said that only 2 molecules are the largest, that is diclone and chloranil. Those we can consider as the commodity products.
And I didn't get
Chloranil.
Okay.
Yeah. Apart from that, none of our products are. Though it might seem as a commodity product, but we manufacture it on the special requirements from our clients. Suppose one of the chemical, you might see that this is a commodity product, but the specification for the same product required by our client will be different than those products.
Okay. And what would be the revenue mix of these 2 products which you consider as commodity?
This would be 5 to 6% each.
So total about 10-12%, right?
Yeah, 10 to 12%.
Okay. I understand. And who would be our key peers?
Sorry?
Peers, competitors.
Actually, we do not have a direct competition because we have presence in over 6 segments. But if we say that whom we are comparing our chemistry with, then that would be Ether Industries or Anupam Rasayan. So those we consider that yes, we are in the same line of chemistry.
Fair enough. I got it. And now coming to, numbers in terms of revenue, I think you mentioned you expect second half of FY24 to be muted because export market is muted due to year-end holidays, right? But I was just trying to understand because last year also this year-end holidays would have been there, right? But last year from first half to second half we saw tremendous growth. I mean FY23 from 33 crores in revenue in first half to about 70 crores revenue in second half.
Yes, but the major sales during that time was local.
Okay, so that
and this year also this year also we see a slow growth in exports, but local market is also thriving at the same time.
Correct. So ideally, because the outlook that you have given 20-25% growth, that ideally means your second half would be similar to your first half in terms of your top line. So that is what I was wondering, because generally second half is generally better, right? So how are we kind of saying that second half would likely be similar to our first half?
No, yeah, it will be likely similar, but there will be changes because current scenario majorly because if you have seen our portfolio, majorly it was based on dyes and pigment.
Correct.
So I think 65 to 70% is dyes and pigment. And the local market last year was quite better compared to this year.
And the last year was much better in dyes and pigment in the local market, right, as compared to this year?
Yes. So now the war situation will define more that how our second segment in these two segment will go. But comparatively, we have agro and electronic segment far better position than last year, because those segment we are growing in terms of quantity. So there we are not seeing that we'll get a downfall, but definitely there might be resistance in the dye segment.
Understood. Fair enough. And you mentioned that you expect significant improvement in your margins as well. So what will be the key drivers there? Is this GMP certification is one of the key drivers?
Yes, it would be one of the key drivers, and another would be when we have the capital at hand now. So when the raw material prices are going to go down, at that time we can procure for our internal use, and at that time the profit margins we can cover up.
Okay. And my last question, FY25, what is the growth we are looking at?
FY25, we are definitely looking at a very good growth, but that would be too early for me to comment.
Okay, I got it. I think that's it from my side. All the very best to you. Thank you so much.
Thank you. Our next question is from the line of Sumit from Sumit Limited. Please go ahead.
Yeah, hi. Thank you for the opportunity. Am I audible?
Yes.
Yeah, hi. So, congratulations on the set of numbers for the first half of 2024. So, I have a few questions with regards to the financials. So, I see approximately 13 crores from the proceeds of the IPO is going for debt repayment. And currently we are at 24 crores in debt. So that is going to reduce to 11 crores, right, going forward? Okay. And I also see that 13 crores approximately is going to working capital financing. So over the past, I think 3 to 4 years, I could see that it's pretty much working capital intensive. Like in 2021, the company need to raise around 10 crores in borrowings to fund the working capital, if I'm not mistaken. Right. So I just wanted to check, going forward, are we kind of targeting a debt-free kind of scenario, in, 2-3 years down the line? Or are we going to kind of, pay off the debt and again raise some additional debt funding to kind of, fund the increase in working capital? I'm not too sure about, how the company's approaches. If you could highlight on this front.
Yeah. So currently, what we are focusing on are the two major projects in the pharma segment, or better say nutraceutical segment. One is this Helquinol for poultry, and another is folic acid. So folic acid is currently we are undergoing lab trials. So these two molecules we are focusing, and of course when these two molecules will take off, I don't think that we'll require more of a capital in terms of debt from the promoters, because earlier also in 21 it was a debt from the promoters itself. So we think that once these two projects take off, where Helquinol is already on the verge of getting commercialized, so at that time it will be pretty much clear that how we are moving forward.
Okay, fair enough. So are we targeting to be, kind of debt-free in the near term, considering that we are approximately 11 crores in the books after this IPO?
So as I said, that it would be too early for me to inform you that how we are moving forward. At least I think it will take 2 to 3 months more to form a strategy about this.
Okay, fair enough. So next question, I would like to know about the capacity utilization. So since I have already mentioned that currently the capacity, the utilization is close to, I think, 75%, if I'm not mistaken, and
Yes.
which was like, I think, increased from 55%, like 20% increase in capacity utilization from the last year. Okay. So is this a crucial factor in contributing to the top line growth of close to, 83% in the first half of 2024? Or is it something like, some products being commercialized and which has, led to this 83% revenue growth? If you could highlight on this front.
Yes, it is the second part, because since we are our model is made to the order, like when we have a order from our customer, after that the manufacturing is being lined up. So when we are having a campaign of one product, and we also inform our other clients who are buying those products. So at that time, if we get the order from those clients all together, so that campaign runs a little bit longer. So when the same product is being run in the plant, the efficiency obviously increases. Otherwise, there is a changeover in the products. So we consider the maintenance time as well as the cleaning time for the changeover of the product. So that time goes by for plant utilization.
Okay. And this capacity utilization, like currently, which is at around 75%, this is going to like hover around this levels in the near future as well, right? In the near
Yeah,
future.
it will go around 80%, but that would be, I think, the peak point.
Okay, fair enough. And just wanted to like clarify this thing, like 600 MT, so it has increased to 720 MT, right? If I'm not mistaken, considering 60
Yes.
MT per month, right?
Yes.
Okay, got it. And my next question with regards to the opportunity size, I wanted to understand in the EV and the electronics market, which is currently in the R&D phase. Okay. So let's say if once this is commercialized, so how much contribution it's going to make in the top line from this EV and electronics market segment?
So electronic segment currently, because the projects are not commercialized, so overall picture is it is not clear. But definitely it will be. We are targeting that we have in our portfolio, we have contribution to at least 15 to 20% from electronic segment.
Okay, 15 to 20% of the total revenue, right?
That is what we are targeting. We need to reach there. So it is not fixed that it would be in 24, but we definitely want to reach there.
Okay, fair enough. So you mentioned like approximately 20 molecules are currently in the preclinical trials. So let's say out of these 20 molecules which are currently in the R&D phase, which you mentioned like, is gonna commercialize after 2024. So how many of them, are like catering to this EV and electronics market? How many of these molecules?
See, the 20 molecules, it is not that currently 20 molecules are being developed. It is the overall, throughout the year, we are targeting that this year we'll be developing 20 molecules. But if we say the number of products in electronic segment, we have already developed 4 products, out of which 2 are already commercialized. And we have in line 3 more products coming up in our R&D.
Okay.
So that is the current scenario.
So basically, the realization of all these molecules which are currently in the R&D phase will be, kind of realizable from 2025, right?
Yes.
Okay, got it. And these 2 products which you mentioned, this Halcoquin and this
Halphenol.
folic acid. Yeah, right. So these 2 products, so what is the market opportunity, for these products from your companies? Because I can see like there are a lot of competitors in this
Yes.
product in the market. So what sort of market share you are targeting in these two products, considering that, these will be realizable or commercialized in the near future? So how much contribution it's going to make in your top line? And second, so how much market share you are going to capture from this, and any like sort of anything guidance or guideline on this?
See, both the products are kind of commodity products, but they are final products. Until now, we are only into intermediates. So these two products are final products, and the market, if we say, then we need to look on the reverse side that currently our capacity is 60 metric tons per month for the Helquinol, we say. So while the market demand is already, we are also importing the same product from outside. Since many formulators are not there, many formulators are based in Thailand, Malaysia, so Southeast Asia. Where we see that these products are being imported, the final products are being imported because the technical grade is not available. So the formulators, they are also on the verge of looking that if it is available commercially, because since we are getting all the formulators in line, so we are getting this notion that formulators want to introduce this product and they don't want to import it from outside. They want to introduce their products in the Indian market. So what we are seeing is per month approx 500 metric tons of market is already there, untapped market which is being imported from outside. And same is for folic acid. For folic acid, not many manufacturers are there in India. Only currently only three players are manufacturing. Of course, the formulators might be there and import from China is also there. But we are targeting that we'll be competing China, and that is why we for our increased margin we want to introduce this product directly into the pharma segment than the nutraceutical segment, because pharma segment has more margins compared to nutra segment.
Okay.
So by the time our product is ready, we also have our plant ready for the product.
Okay. So currently, do you have any dependency in terms of, in terms of the concentration of revenues from your, let's say, top 5 or top 10 clients, or how is it like? I just wanted to understand. So how much, top 5 clients contributes to your top line? What percentage?
Top 5 clients would be around 55%.
55%. And like any target to kind of reduce this dependency, going forward? Or
earlier we had a presence in cosmetic and dyes and pigment segment. But with introduction of new segments, we are decreasing our dependency on other players indirectly. Because when we increase our presence in electronic market, at the same time the revenue is increasing, but the dependency on dye segment it also decreases when we see overall picture. So that is why how we are increasing the number of products in other segments rather than shifting our focus.
Okay, fair enough. Just one question on this H2, since this has been put up a couple of times. So I just wanted to understand, since it will be muted on the top line front, so we'll be able to maintain the margins, right, for Q2?
Yes.
Okay. And how about the cost structure? Wanted to understand, because since it caters to 5 different end markets, and we are also adding products into different end markets. So going forward, let's say 2-3 years down the line, so will cost associated with all the molecules and all the sectors. So do you see any cost inflation or cost kind of playing a major role in your financials, kind of on the hitting the margins, or you'll be able to kind of maintain or improve the margins, let's say 2-3 years down the line, considering that all the different molecules which are currently in the R&D phase, they get commercialized. So what are the cost structure like? I wanted to understand 2 years or 3 years down the line.
So when we are developing new molecules, we are also keeping in mind that we are not going to work below a specific margin. So when the margin for the same product, when other players tend to come in the same product, at that time we shift from one product to another. So we already have a lined up products when we are going to shift from one product to another product. If there is a significant volume or our commitment is there with the customer, then of course the customer is going to support us in terms of costing. And if that is not the case, then we shift from one product to another.
Okay. Okay, fair enough. So my last question is, with regards to the growth plans. Like, so currently what we are planning is kind of organic growth. So any like future plans for any, acquisitions or any kind of integration in or industry consolidation? Just wanted to understand, because you mentioned that there are not too many players which can be comparable to your businesses. So just wanted to understand. So will you be kind of, going on a acquisition kind of a thing in the future, like let's say 2-3 years down the line, to add multiple or, business verticals or business sectors under your like umbrella? Or you will be kind of continuing, expanding the molecules, or it will be both or either one of them? Any future plans on this?
Yeah. When it comes to opportunities, we are open to that. But majorly what we focus on is the chemistry capability when it comes to working with other toll manufacturers or other players in the market. So when there is a uniqueness or some factor which is not a part of Paragon, so at that time that question will come that, okay, now we want to enter this segment, or we want this capability. At that time, otherwise, always the option of acquiring the old plant is always there. But acquiring a new plant or acquisition for new factories would be a strategic move when it comes to the capabilities of chemistry.
Okay. Okay, fair enough. So I believe that's it from my end, and wish you all the best.
Thank you so much.
Thank you.
Thank you. Our next question is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Yes. Since you mentioned earlier in the call that the projects we put on the ground a couple of years back are now bearing fruits, just need to understand what is the increasing contribution we are going to see from some of these projects that you can highlight, and currently, which are the projects that we are putting into implementation which will start contributing, say, 12-15 months down the line?
Majorly how our projects go on is that when we meet our customers for their new requirement, so they give us their target price, and then we work on paper chemistry, and then if they agree that this would be the costing, then we move ahead to the lab scale. So lab scale, again, we give them the pricing that this would be the actual pricing that we are looking at. And after that, once that is cleared, we go to the pilot scale. The pilot scale, it also takes time, because if our customer, they also want to make their final product and test it in the market. So at the pilot scale, it is say 50 to 100 kgs of the material. And then there would be trial order from the customer. So all these steps are based on the pricing as well as their performance of their final products in the market. So both these steps are, because it is not that we are targeting 28 molecules this year. Not all the molecules are going to take off. Yes, definitely these molecules are the requirements of our existing clients, but at the same time, it will also be tested by the market, that in terms of price, because these are specialty molecules, it is not tried and tested. These players are going to test it in the market. So we do not have a definitive number that these many molecules are going to take off this year. But some of the molecules we are seeing that it will be commercialized, as I mentioned, that during CPHI in last week, when we met our Japanese customers. So we are seeing that we'll be closing the deal, because almost everything is now setting up. This is the project that we have been talking since 2020.
So the pilot stage, lab stage, and sample stage, all of that is done, and now
Trial stage
it
is
is for
also
market.
done. Yes.
Okay.
So this is how, because we are, when we work on many molecules, at that time, the chances of getting commercialized will increase year on year.
Yeah. Okay. And second thing which you said is focusing on the chemistries, and while similar chemistry can develop products that can have multiple applications, like you indicated for pigments as well as even starting material in others. So same lines, we are going in for a product which is going to be for poultry industry, some other nutraceuticals, some pharmaceutical as well. These new products are going to have superior realization and margins compared to present profile?
Yeah, some of the products, like if we say that when we talk about the percentage where it will stand in the margin, then these two products will be in the top 10 products in terms of margin as well as volume.
Okay. And what is our policy in terms of pass-through when there are escalations and fluctuations in the market? How dynamically can we pass on the cost?
So when a product is developed, the customer is also aware, because they also have they had already worked on the route of synthesis, and they already know that what are the raw materials for these products. So when the prices fluctuate in the market, either the demand for that product goes down, or the customer absorbs the if it is more than 5%, the customer also absorbs partly from their end the fluctuations.
But generally, we are able to pass on whatever we are absorbing in a month's time, or does it take a quarter?
No. Because every time we work on the product, when we are quoting them, every time the prices are being worked.
Mm-hmm.
So the market prices are directly reflected on each order.
Okay. And lastly, on the capacity, since we are focused on custom synthesis, custom manufacturing, and bespoke to the client requirements always, what is the kind of reactors we are looking to add and speciality capabilities in the next 1 to 2 years, at least as per our aspiration, where you have already identified markets, you already see potential, you've done some research and testing, and now it's just about putting things on the ground. Maybe next year you will start, but we just want to get a sense of your vision. This is the chemistry and the capacities you're looking at.
So currently we are, you can say we are analyzing two of the major chemistries that would be a radical change. One is flow chemistry and another is fluorination. So these two chemistries we are looking at, we are analyzing right now. We have not finalized yet. But these two are the because both the chemistries require a huge capital in terms of infrastructure as well.
Yes. And the capacity, not just for these two, but even presently the capability that we have, what do you think we could add? Because you said we have 2 units. So do we have sufficient space to add in existing premises, or we will need to take significant efforts for new capacity?
Yeah, for new capacity, we have to get new plant. But what our model is, if we do not have the capacity, that then the complex chemistry is done in our plant, and the regular chemistry that is being toll manufactured by outside. So we also have a tie-up with 2 units in Ahmedabad itself, where we get our products toll manufactured on regular basis.
Okay. All right. So lastly, do we have any aspirations in terms of the potential that we have identified for our products, where we could be in 2 to 3 years down the line? Let's say, for example, if you are going to be 250 crores in 3 years' time, and maybe 20% plus EBITDA margins. Any aspiration you would like to share?
That would be again too early for me to quote it.
Okay. Anything else other than top line or bottom line or margin? Anything in terms of markets where you will definitely be at, or market share that you will definitely have, just so that we understand that there is at least this ambition. Otherwise, we would not be aware of these things without your sharing.
Yeah, the market share, if we say, then we definitely want to have a strong presence in cosmetic industry, because that industry is still huge potential. It has huge potential in India as well as in export market. And another segment would be the pharma segment, where we see that long commitments as well as long-term plannings are also there.
Mm-hmm.
So these two segments we are focusing that we want to grow significantly.
Okay. Thank you so much, and all the best again.
Thank you so much.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Ramadeen Rane from Hem Securities for closing comments. Over to you, sir.
Thank you, Zico. On behalf of Hem Securities Limited, I thank Rutesh ji for representing Paragon Finance Specialty Chemical Limited and for spending the time and giving and answering all the queries in a detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over to Zico for his closing remarks.
Thank you. On behalf of Hem Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.